Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back. Welcome back for another episode. This week, basically, everybody probably have seen the news. So more or less dominated by what happened to Capitol Hill in America. The problem with democracy going out of hand, so to speak, with a president of the United States, telling people to gather, then one way or another, entice them to gather and protest. And of course, some of those people, a lot of the people are the demonstrating peacefully, but unfortunately, some of them are not. And basically, stormed the Capitol Hill, the Senate building, and some people got killed, and that is very sad. And it basically, a lot of condemnations talk about what Donald Trump have done and so forth. But the thing is, it's very disheartening to actually see this type of things happening in America. But on the other hand, when there is riot on the street, so to speak, not significant riot, it's quite small, but it's a place of significance in the Capitol Hill. The Dow Jones basically just don't even have a look at it at all. And just for the whole week, the last week, initially it's a bit up and downish, but then still progressively making higher highs on Dow Jones, and even the gold have moved down quite a bit as well. As if or the stock market is doing one thing, the mainstream is doing something else, so it doesn't really care what the political system is. The stock market just continue to go up as if there's just so much money, it looks like, and then as the stock market is divorced from what is actually happening on the ground, and so much so that even the political upheaval and stock market don't really care. And then the other thing that was, I'm not sure there's anybody talk about much about, is the bond, U.S. bond. I think 10 years yield have increased to about 1%. I mean, for the last two years or so, the bond yield, the 3 years, 5 years, 10 years, 30 years all go down slowly, and I think the 30 years still about 1% something, but the 10 years definitely dropped below 1% for some time. And then now we have a sudden increase of that bond yield. That means people are dumping, not buying the American bond, American IOUs, and to attract more investors to buy them. Basically, the Feds have to, American government, on the whole, have to increase the interest rate. That means have to give more money, interest, to entice people to actually buy the bonds, to buy the IOUs. And this is sort of show up in the TLT ETF. That the TLTs keep on coming down. It's been doing that for the last couple of months already, but only I think on Friday it basically increased to about 1% for the 10-year yield, which also put a knock onto the gold share, and it gone below the 1900 mark, 1920, which was gain early in the week. Was about like 1960 area for about a couple of days, but then now it ended the week at about 1850. So quite significant downturn for the week for gold, like $100 kind of thing. But that is quite normal. But however, that's quite volatile as well for gold price. But as far as I'm concerned, U.S. dollar is weakening, and we just probably see when it will happen. Nobody knows when, but my guess is probably sometime next year. Well, probably end of this year or next year kind of thing in 2020, because as the pandemic got in its way, which is already the vaccines coming in, irrespective is useful or not, at least let's give people some hope, and hopefully give people around the world a chance to restart the economy. But that is only the start. When the economy start coming in, taking full swing, people couldn't find jobs. A lot of people got on unemployment on the dole, and signing on, so to speak, and ask government for help. There's only so much the government can do, and we really have to restart the economy. And just so many backlog of information problems on the economy front. And at the moment, the Dow Jones or indexes around the world, major indexes, just doesn't want to know about it. All they're thinking of is the vaccine that's available now is going to kill everything, and everybody's happy. And also, of course, we got Joe Biden, president-elect, coming in America soon, in about 10 days' time. But that is all seems to be putting into mix into the stock market, and nobody's really looking at the grey rhino, so to speak, the actual problem that's actually standing there in front of everybody to see, and the jubilant of having a new president coming in, which do away from hopefully what President Donald Trump had done, more provocative than any other president, and hopefully President Joe Biden will come in with more even keel kind of handling, more, working together other people than, more confrontational. So that seems to give the Dow Jones a bit more uplift. But as far as I'm concerned, it's just not. It is just, as far as I'm concerned, it's more like a honeymoon effect, that kind of thing. Everybody think the vaccine will be there, will be great. We have a new president in America, should be great. The economy should slowly pick back up. Everything will be great. But everybody thinking of a positive scenario. Nobody talk about the negative scenario. What ifs? I've mentioned quite a few, like. People are worried about the vaccines. Does it actually work? Because we have been rushing it out. Each country does of its own. China, so it's Russia, so it's America, so it's UK, and the amount of people that have been tested. It normally takes like 18 to 24 months or something to test a vaccine. Minimum a year. We've been like rush like in 6 or 9 months kind of thing, just to save lives. So we start economy, and we don't know how that will affect all sort of people, from all sort of continent. But let alone if all of this is working, let alone nobody talk about distribution as well. All we talk about is developed countries, the rich nations have got the money and the connection to or the political power to one way or another get some vaccination done for their own countrymen. But what about the people in South Africa, Latin America, Sri Lanka, kind of thing, places where they are developing country but they are poor and they don't have the political power to get the vaccine in the queue, the first of the queue, so to speak. So to vaccinate 7.8 billion people, it's going to be quite a bit of a challenge, and that's providing everything on vaccination. All of them are all working, but who knows? Just like anything around in the world, nothing works just because you wish it will. It probably give you a bit of hope initially, but then when the dust settles, so less the vaccination comes into maybe 3 to 6 months, and people start to see the direct benefit of the vaccines. And people already show in UK as well as I think America as well, people who have pre-existing issues, some of with the skin or something already, certain conditions will rashes or something, and causes more severe reaction once they have the vaccine. And some vaccine in America, I think it's reported that even though people have got I think that's the Pfizer vaccination already injected, a couple of weeks later when you do COVID-19 test, it's still positive. So that means they become like asymptomatic people that carrying the disease possibly, and can be spreading around, but it's not affecting them or something. So that's still a carrier risk, and I don't know how that will work out. But that's only like rushing things out for the last month or so, since December. And it's not even a month yet when the vaccine coming out, and we have already some of these side effects are being talked about. No doubt there will be a lot more, and then how does people feel about it later on is anyone guess, and we don't know what the side effect there might be. And this all been thrown out the window, and also with the vaccinations, that's quite sporadic around the world. That's been spread around with the vaccine dosage spread around the world. When are we going to start international traveling? From as far as I can see, if 2007, 2008, when the subprime market is anything to go by, after a major economic downturn, people's international traveling will be much reduced. First of all, because they lost a job. Secondly, economy have to readjust themselves. Shops and companies probably don't want to rent anymore as much business spaces, so to speak, commercial spaces to house their staff. People work from home a lot more, and therefore using Zoom and internet and all more that kind of thing, and thus have a knock-on effect for international traveling. Domestic-wise, probably still people will still go, but like I said before, people without money, without a job, they might not even they might drive more or use local buses and transportation more than flying. And that's within domestic area. What about international flying? I think that's definitely going to be much reduced. Also, the vaccination. Look at Hong Kong, for example. They have very low cases, but a lot of cases, I think Japan as well, and so South Korea, a lot of them are from international travelers who come into the country. It's from external sources, not internal. From within their own border, so to speak. And so the vaccinations monitoring or the type of vaccination people have been used and then actually allow them to travel is still up for debate. And nobody said, if you have a Pfizer vaccine, would that be enough for international traveling? And I said before, will the Chinese vaccine be good enough to travel to US? Will be good enough to travel to Russia and also to Latin America? And same thing for UK, with the AstraZeneca vaccine. Will it be good enough to go to Singapore, for example, or Australia? There's no international standardized standards on, what vaccines is good enough, and you have to be done within certain time, certain hours. Then you start as like a report card or something, carry with you while you do international traveling. All of those red tapes and stuff is necessary, in my view, to protect the local countries, whatever the country of destination you might travel into. So all of those things I don't even talk about. That's even before you're talking about economy to around the world to kickstart. The only thing you see is right here now is Asia is definitely moving up, and we cover much quicker than the Western Hemisphere, the Western world, so to speak. I believe that's probably because they got SARS in 2003 before. They have MERS and other things before, and they understand how to handle those. And also the significant factor of using a face mask. It's just part of their life. That's how they use it. But it's the West, and it's not, it's very much used to that kind of thing. And also in the East, people are a lot more listen to the government, so to speak, more tolerant to the government, much more listen to them. But in the Western world, it's more like individualism. I tell you what to do. I don't follow the government. Government's conspiracy theory. It's not up to no good, so to speak. It's quite a different way of thinking. I'm not saying right or wrong. It shows how the cultural difference between Asians or Southeast Asians, Asian in general, and compare that with the Western world, and how that compare with the vaccination and how people protect themselves, how they handle the coronavirus spread and so forth. So what we basically see is because maybe, like I said, the East have got a taste of SARS before, they know how to handle themselves. They seem to come out relatively quicker, especially China and Singapore as well, I think, as well as South Korea. It seems to come up a bit much faster than better people than other people. But in the West, let's say America or UK, for example, don't seem to have got their act together and continue suffering quite a lot with the COVID-19 and the variant extra strain of the COVID-19 as well now. New variant of it, and it's basically just as far as I'm concerned, I'm based in UK in Bath, and we're still under lockdown, and as far as I can see, the government haven't got really a handle of it. And you can see the similar things in America as well. Lots of people continue to get killed, the virus continues spreading, and lots of people not having a job, food banks queue is increasing. A lot of people couldn't pay the rent or gas electricity, whatever. But the stock market just defaults from the whole thing and just continue up. So as far as trading is concerned, we see that at the moment the stock market is more emotional and thinking of the good time, thinking of the positive cases, and also helped by the flood of money, cheap money from not just U.S. Feds but around the world as well to try to jumpstart the economy. Look at UK. Just keep on furloughing staff who's supposed to be probably losing their job because the company just couldn't operate at all during lockdown, or with the social distancing. A lot of pubs or hotels or hospitality, like restaurants, businesses just couldn't produce enough income to even pay for the rent or staff, so they have to reduce the overhead. But the government is helping in UK anyway, and I think in Europe as well, so is America, to help those company keep all the staff. So, but the each country to their own, depends on how strong they are, can only help so much. The stronger one, the richer country, can give out more money to their own citizens for a little while longer. But at the end of the day, maybe maximum, maybe probably about a year or maybe 2 years, that'll be maximum, must be enough. And they cannot continue carry the can, so to speak, so they have to kickstart the economy. But all of that seems to be working really well at the moment, so that is not being think about by any in major indices around the world. So you can see the actual, how stock market is basically is driven by emotion. And I say at the moment nobody's looking at the actual problems. Maybe I'm more, because I'm a software consultant doing a lot of support and stuff, fixing problems. I'm looking at the more the problem side of things. So when the reality kicks in and people start thinking about what ifs and how everything else not really working as is such, people will start putting more better pricing on the stock market. So very much like Warren Buffett saying, in the short term, the stock market is a voting machine. So the moment everybody's voting with their feet, with the money, basically the economy continue to grow. But in the long run, it's a weighing machine, because in the stock market, irrespective of whatever the name of the company called, it's a business underneath. If they cannot make money, they cannot keep the business, they cannot sustain the overhead, couldn't grow, the stock price will just will match that and just come back down again. So we just have to wait and see when that will happen, and we just have to wait how we go to basically play the market, so to speak. But one thing for certain, when people start to, or the market suddenly realize that that's an issue with the economy, recovery might take longer, the COVID-19 vaccination might take a bit longer, and so COVID-19 may be mutate themselves into a longer thing, so it won't be just like this year. It'll be much more, 2-3 more years down the line, still be around like a normal flu. That kind of thing. Nobody priced those in, and then when the price readjust, we might see a big turnaround. So as far as I'm concerned, be warned, guys, and just make sure that when the markets turn, you just have to go with it. The other thing, of course, last but not least, is Bitcoin. If you have followed my podcast, you have made quite a bit of money out of that. I've been telling people to buy that since around 1200-ish area. Anything basically above the 10,000 mark. But now I think over the weekend I've reached 40,000 as far as I understand, maybe a bit higher. But according to IG Index, which I used to spread bet on, Bitcoin is come back down below 40,000 at the moment. But as far as I'm concerned, when I look at the charts, the RSI is above 90. Around there, about 90. Now, the only time that ever happens with RSI, the normal RSI 14 days sampling, the average default version for a lot of charting software is at the value of 90 or above, is back in, I believe, 2017, when the Bitcoin was as high as 19,000-ish. That was a previous high. Now we're way past that. And that was also a very much a parabolic increase in price at the time, and then we have quite a big drawdown. And at that time, when the price moved up, that was about up to 1991 area. So we are very close, or at the end already, around 90 on RSI. So be warned and be careful about that one. So. But who knows what will happen? People, at the moment, so much money, and basically with the cheap money flooding around this time, it's not the retail, may not be the retail investors that are pushing the price high, so Bitcoin price so much. it is more look like a institutional investor pushing it up. But if you are not careful, you probably become shark's dinner, so to speak. Somebody's dim sum. Because when the retail investor try to rush in now, it's this elevated price, and RSI is so high. I'm sure probably if not careful, if you go in and the market turn and you don't get out quickly and hoping it will continue to go higher, then you might get burned and get hurt. So be careful of that as well. Basically, that's basically what's happening this week. But yes, all eyes on America and the Capitol Hill, what happened. And now, of course, there's a lot more call for President Donald Trump to resign or impeach him second times. His way of provoking people to go into to demonstration outside Capitol Hill is sort of causing all these issues on last week, and I think all of that is to me personally, I personally don't like President Donald Trump, but he's still a person, and I just wish him very well, everything good, even when he come out of his presidency. But all these things that he have done to basically stoke the fear of people and get them on the street and arouse the emotions and stuff. It might backfire onto him, and if he lose, well, he is losing his presidency next year. Not even next year now. It's in 10 days' time when he come out from his 4 years role, well, end of his current presidency. What will happen to him? There's a lot of talks of court cases waiting for him next year. This year, 2021 or 2022, and he might be try the last ditch effort to save himself, might write himself a get out of jail card or something, and who knows what he might do. He's a bit crazy at times, and we just have to wait how it goes. But it looks like the good times continue for this short while. Everyone thinking it's a good thing and saying President Joe Biden will save the world, and we just have to wait and see how things go. With that, that's the end of this podcast, and for this week, I'll look into. We'll talk to you next week about that one, and next I will update my portfolio. Okay, first off the bat is Apple. This week is slightly changed now. Over, I think on Monday, there's large drops on the price, and I think that's index move, a big move over the Monday, and it recovered quite a bit, but the damage has been done. So for Apple, short term is a sell, medium term because of a big move, medium term is neutral, but long term is still up above 50 days and 200 days moving average. So long term is still buy. As for Apple. Next is Amazon. Short term is a sell because of the big move on Monday. Medium is still neutral. Medium term is neutral. Long term is still a buy. Next is Australian dollar against US dollar. No change here. Basically buy across the board. Is basically gone like up to 0.79, I believe, at one stage, and come back down 0.77, 0.78. So it's slowly creeping up. The US dollar index seems to have gone below the 90, but I think on Friday have recovered a bit somewhat. And I did say on the Chinese yuan, Chinese dollar, have shown some sort of a bearish divergence. So when the basically the MACD histogram is showing an improvement on the curve is sloping up, but the price of the US dollar against the Chinese yuan is continue to come down, and it looks like there's some sort of turnaround soon. So if that indication is correct, and also the recent decline of the US dollar index, when it going past 90, seems to be the difficulties go below 89. So I think the lowest on Monday or Tuesday gone down to 89.10 or something. So it's quite low, but it's not as low as 88.5 or something. That's I think that was made like a couple of years ago. So it looks around here, maybe getting some support, and that's also playing to why the gold will certainly turn negative as well. And basically, I think possibly the recent US dollar weakness, index weakness, is probably getting back strength a little bit more, but who knows? Let's see how it goes, and we just have to watch the chart, so to speak, and also follow your system. So for Australian dollar against US dollar, it's buy across the board. So it's short term, medium term, and long term is all buy. Next is Brent crude and WTI crude oil. Both of it is same as Australian dollar against US dollar is buy across the board. So remember, what's 9 months or so ago or 10 months, everybody was panicking. Nobody wants oil and it gone negative in the future. It was minus 37 to minus 100 at times, or people talk about it. It can go as low as minus 100. And all those storage issue, like 90% is still, filled up, and tankers was waiting outside the Gulf of Mexico there, waiting to be to offload from the ship, that kind of thing, to be refined in America. All of a sudden, all those news gone, and okay, yes, we have less of a lockdown, at least some sort of movement around the world. Not much international traveling yet, or cruise ship and things, but at least country internal traveling is allowed. In Asia seems to have recovered a bit somewhat, and Brent seems to be showing up. So as far as I'm concerned, the crude oil in general is have recovered quite well, but it's not as high as before the pandemic. I think that's Brent crude about 65 or something, and then the WTI crude about 55 or something thereabout. So it's still a little bit below what at the start, what the price is at the start of 2020. But it's recovered, but now it's more like a sideways trade as well. So we just have to see how it goes. I mean, at the moment, as far as I'm concerned, I'm following the trade, I'm following my system. But from a fundamental point of view, I think it's gone a bit sideways, with people realize that there's less lockdown, but the economy is not really going back to full stream until they sort out all those zombie companies. Like what happened in Japan, when basically the government just keep on pumping money into the banking system, keeping a lot of those private companies' bonds market afloat, basically just injecting money into those zombie companies who basically, these companies are not basically making money, and they're not able to pay back the loans, and all these IOUs, basically the government just take over. And I'm afraid similar things could happen in the West. I think in Europe, as worse. I think even worse it will be in America, and that's just the way to come. We just have to wait to see what happens then. But the problem I have is I have no crystal ball. I have no idea when it will happen, but all I can see is those potholes coming through. But we just have to wait and see. Next is DAX is buy across the board. Short term, medium term, long term is a buy. So same as last week, no change there. Next is Dow Jones. Again, is buy across the board. Short, medium term, and long term is buy. So just as I said before earlier, the stock market around the world is more or less leaked by America, just like not seeing any issues around the world. Forget about COVID-19, forget about economy. It still take time to recover. You just think of all the good times, and it just gone, yo-yo, continue to move up. It might be some volatility coming in, but still, on the whole, continue moving up. One just wonder how long this will last. That's another thing for trading. Sometimes the market can go extremes, can go up or down, up to the point that you never believe it. And when you time, falling the tower, then the market turn, kind of thing. So rather than guess, which like I said before, I have no idea where things goes from one day to the next, or even from 1 minute to another. So wait for the market to tell you what to do. Wait for the price, end of day price, to tell you what to do. I think that's the best way. I've done a lot of guessing, checking, predicting, or hoping, and all the time I lost money. The best time I'm not losing money is following my system. So if you follow your rules and your system say go in, then go in. If you say don't go in or stand aside, then don't go in. Don't try to have itchy fingers. Like Jesse Livermore said. He make money when he's waiting. Sitting on his hands, waiting for the market to give a signal, and when the signal given, he's waiting for the market for it to give another signal for it to get out. He doesn't do a lot of trading, but when he go in, he go mad, he go quite heavy in it, and then he just wait, and he's very good at getting out when the market turns and the system say get out, he get out. He has no emotion on them. So I think those are the kind of thing we all need to learn now. Emotional. The market is driven by emotion, okay, and everybody is very happy for some reason, or or somehow that's how we reflect it in the stock market. But is it generally people very happy? And in general, I don't think so. But for some reason, the stock market is saying everything is sunshine, everything is fine, and pot go down the rainbow, nothing happens. If you look at any problems in the horizon. So just be careful when the market may turn very quickly. But we can also be careful that we need to be patient. This moving up, the major indices can have some legs, to go. Then we just have to see what happens. Next is FTSE 100, same as Dow Jones. It's buy across the board. Buy short term, medium term, long term is buy. Gold, obviously, we have the big sell off on Friday, so to speak. So overall, I think the week it broke up to 1960 around there, and then come back down to 1850. So it's like $90 within a month, a week. For gold in general, I don't think that is too much of an issue because you have seen over the past few months that gold can probably not maybe a week but maybe 2 weeks or 3 weeks, it can just move up and down $50-$100 very very quickly, very often. And that's similar to back in 2010 2011 when I remember when I first started trading gold and things. I mean, things can go up $100 at a time and come back $100 at a time within a day. So that's just the norm, but also it's telling you that there's quite a lot of volatility going on. And I think this year's year of gold, but who knows what's happening at the moment. Gold is basically short term is a sell, medium term is neutral, long term is also a sell because the price goes on Friday below 50 days and 20-day moving average. So when I follow the system, I have to go out. So on Monday, I'm going to sell my position because Friday already giving all the signal. So what can I say? But from fundamentally wise, I still believe gold is a good one to watch out for, and then see what next. But I definitely will trade anyway. I trade for both upsides as well as downside. I short things with spread betting, so I'll be shorting gold. We'll just see how it goes. But fundamentally, I still believe there's got some legs because just too much money being further around, and I do believe the US dollar index is just temporary. We might even come back up to 92 or something for the dollar index, US dollar index, and then the gold probably even go down a bit more to maybe 1700 area somewhere rather than 1800, another $100 down over the next month or two. Who knows, that kind of thing. But I think overall, the US just have to pump more money into the system, just like UK have to keep on borrowing more money, and therefore that's weaken US dollars overall. And we will therefore see anything that's rated as US dollar just going to increase in dollar term, in price, so to speak. Might not be immediately, probably another 2 or 3 rounds of stimulus package coming in from America or around the UK as well as Europe. You see a lot more US dollar sell-off. So I probably see maybe end of the year kind of problem with gold going up. So the problem with the US dollars basically weakening will be massive. It will be way underneath at 90. I don't believe it will be anything close to current level. Probably quite a lot more. But we'll see how it goes at the moment. This is just my hunch. But my system says sell at this moment, so I just stick with my system and sell. So that's for gold. Next is Hang Seng Index in Hong Kong. SPY just like last week. Buy for short term, medium and long term. So if anything goes by, the Hong Kong index seems to be slowly following its big brother in America, and hopefully this will continue a bit more. Next is Nasdaq. Buy across the board. For anybody who's been following technology shares in America, know Nasdaq is very very strong. It might be up and down, but short term, medium, and long term is all buy for now, and we'll just wait and see what happens. Nikkei similarly just following America, has been on upturn for quite a while, and it's still buy. So short term, medium term, long term is buy. Silver is following its big brother with gold. Didn't fall off the cliff as much as gold though, but short term is still a sell. Medium term is neutral, but long term is neutral. So the price hasn't gone below the 50-day and 200-day moving average yet. So it's just below the 50 days. So just to wait and see. So overall, we have to see how things are. Like I said, I believe, just like I said last week, I think last podcast I said, I believe when recovery comes in, that's economic recovery. Silver will be the one that should have been more first, and with the weakness of American dollars, I do think silver might have more legs than gold, and when it recovers, we'll see how things go. Now gold so far has already broken for last year anyway, above the 1920 area that we just last achieved back in 2011. Silver hasn't reached $50 yet, which again achieved around 2011 last year. So we just basically see how it goes this year. But if the economy is slowly recovering, people, America, around the world is people are buying more handset and electronic stuff. That's brought out from what Samsung, not Samsung, South Korea export into different countries, and China is some in there, but mostly to Europe as well as to America and the rest of the world. And I think electronics is there's more recovery over there, and therefore use more silver. And the weakness of American dollars will also help as well. So I think this year may also be, be a year that we see more significant increase in silver than in gold. But again, it's just my hunch to just see how it goes. But at the moment, my system is saying sell short term for silver, medium term is neutral, long term is also neutral. But again, I just personally feel this year's really a price is for gold, is for soft metals. So gold and silver is the one to watch out for. So we just have to wait and see. But at this stage, follow the system. System say sell, so we sell. Next is US dollar against Chinese dollar, Chinese yuan. Same as last time, it's basically last week is sell across the board. Like I said earlier in the podcast, there is a MACD divergence there. Basically, the MACD curve is slowly, bouncing up with a trend line. But the price of basically US dollar against Chinese yuan is Chinese dollar is strengthening against US dollar, and have quite a bit of major move down below the 6.5 area. So now it's like 6.45 or something around there about. But it looks like there could be a bounce, so we just have to wait and see. I thought it might happen last week or maybe this week as well, but it haven't yet. So we just have to wait and see on that one. But at the moment, it's sell across the board. That means Chinese dollar strength and US dollar's weakness. Next is US dollar against Japanese yen. Short term is a buy. Medium term, long term is a sell. So short term wise, people getting out of Japanese yen at the moment. But it's around 10. It went down for the week to as low as 102, but it went back up to 103.80 area now on Friday over the weekend. So we just have to wait and see what happens. In short term is a buy. Next is British pound against Japanese yen, and British pound against US dollars. Both for these two crosses, short, medium, and long term is buy. Overall, people are very jubilant about, of course, the British pounds getting more strength after coming out from Brexit from Europe, and the US dollar's weakness also helps it a bit, and we just see how it goes. But at the moment, it's still buy for these two crosses across the board. Next is, like I said earlier, is Bitcoin. It's broken the 40,000 mark, and on Friday, I believe. It's basically buy across the board. Short term, medium term, long term is a buy. But like I said before, this is coming for warning. I believe every time I see RSI more than 90, it can continue for quite a bit. I think I see some shares or indices of 95 before, but that's more like near the top kind of signal. So be careful with Bitcoin. I think it's kind of too toppy with the parabolic move for last month or so. It is just actually too good to be true and too good to last forever. So just watch out when it turns. Okay. Next is TLT, iShare 20 ETF TLT, which tracks the long dated bonds, and sell across the board just like last time, basically last week or so. So short term is a sell, medium term is a sell, long term is a sell. Okay, so that, like I said before, U.S. government have to offer higher interest rate for 10 years yield, to increase to above 1% to get investors to actually buy the bonds. And we just have to see how it goes. And also, if you search on internet, you can see, I think the U.S. government also release a statistics on a monthly basis or something that shows every month who is the highest holder or foreign country holder who is holding U.S. bonds, so to speak. You can see that China used to be the highest one, the top of the pile, but then Japan has overtaken, I think, in the past 6 months already. So you can also see Japan, UK, Hong Kong, and China is in there. in the list, but they all been shedding, more or less slowly reducing their US dollar bonds and holding. The values reduced quite a bit as well. So we just have to wait and see how things are. But that definitely reflects that a lot of countries, not just UK, not just China, has been dumping, at least reduce buying extra US dollar bonds from the American government. So that is showing up with the TLT here, ETF. So watch out for that. Next is Tesla. Buy across the board, short term, medium term, long term is a buy. Like many people already say on the internet, on news as well, regular financial news, Tesla gone up like 700% in 2020, and will it continue? Who knows? But at the moment, systems say buy across the board, so we just wait and see. But one thing I see, major issue, just like any other company, is people in Europe. I think it's basically two halves. It's a bit like pizza. One half of the pizza is one flavor, and another side of pizza is another flavor. So I see East just continue recover and booming, and slowly, recovering from its problem with the COVID-19 problem issue. But the rest of the world is just not doing that, especially America and UK and Europe as well. And I think the Tesla will be able to sell more of its cars in China than selling in Europe. Incidentally, I think last couple of weeks, Tesla announced that when it announced its figure, it make 500,000 electric cars last year in 2020. They already started to export Chinese-made Tesla cars, I think it's Model 3, to Europe. So they get quite a lot of incentive from China to actually set up a factory there, and a lot of tax incentive over there. And now they're selling that car or bringing that car into Europe, which is able to hopefully lower the price in European model. But again, it will be Chinese made. Now, will people buy that? I don't know. Will the American buy that? It's from China. Even though the company is American, but it's assembled together in China, they might think because Chinese worker touching it, they might put some bugs in it or some spying cameras or something in there. Who knows? And as far as I'm concerned, all this about security thing, there's some merit, but not as much as hyped by Donald Trump's administration. But as far as Tesla is concerned, it's still a buy, so see how it goes. But I think basically two halves. European sales probably will be slump quite a lot, so is America, because a lot of them out of job. And China and Asia probably still will be quite buoyant, especially China. They really want to change a lot of their diesel cars or oil petrol-based car into electric cars, so to speak. And they got a big market there, so I think Tesla still got some legs to go from there. Next is Australian index. SPY short term, medium term, and long term. So Australian index slowly have it's been quite rough for the last couple of weeks or so. It's up and down a bit, but it's now short term wise has following Dow Jones as well, going up. Medium term is up, long term is up. So looking things are better for Australian index. Last but not least is Alibaba. Short term is a sell, medium term is neutral, long term is a sell. There's some sort of recovery of Alibaba price. It's tried to go back above the 200-day moving average, but failed again. So the market histogram is reducing. So the movement of falling down seems to be, the force coming down seems to be a lot more reduced, so to speak. But as far as I'm concerned, Alibaba is still a sell at this moment. My system basically says a sell. Like I said before, Alibaba is a strong company. How the Chinese government is going to play is hands about regulating the e-commerce, and as well as like Ant Group, the financial sales of products online, how that's going to be monitored and regulated is still there to see. But until that's all clean up a bit, Alibaba I think is still going to be a temporary sale at the moment, so we just have to wait and see. That's the end of our podcast. So this week, the major call out here is watch out the Bitcoin. The other thing people not talk much about is there could be a ugly sign of U.S. bond market collapsing. So have a look, watch out. 10 years bond yield gone up above 1%. So it could be significant. It could basically say, even though America mustn't want inflation or interest rate going up yet, but we probably will see something coming in maybe later this year, maybe next couple of years. I think maybe much earlier than what the Feds will want, and when it comes, will be quite heavy. That's just my guess at the moment, but those two little signs, a little warning for this week, so just watch out, guys. So that's the end of my podcast for this week, and I will talk to you next week. Happy trading. Bye for now, and be safe.